Hello, this is Vance, and this is Friday, October the 31st, 2014. And I'm doing something a little different today. I recorded all my trades right from the very beginning today, and I had to edit some of this out because it took over 2 hours. And so I edited out the dead space. The first thing that I did when I came in this morning is to mark this channel that was down. And you can see this was a down channel that I have on my chart here. And so there wasn't really any trade to take at this point in time. When price kind of turned around, this is speeding up a little bit. I took a short right here, and the reason I took this short was because I thought it was rejection off this channel. It really was when price got to the top of this level. I thought it was a strong bear bar. It's like a second entry short from a top of where it was rejection, and I got my first two contracts off, but the runner didn't survive. So you see this line that I have on the bottom here really indicates a threshold or the bottom of what may develop into being a support area. And so that's why I have that line across there at this point, because we've had to revisit this area a couple of times. And it really turned out to be the area, as you will see later on, is that became the line in the sand. It really became significant support. And at this point in time, it isn't significant support. It's just been revisited. Now, this time, price does revisit this area. I've got my first two contracts off, but then there's hesitation. And immediately after the bar closes bar, it reverses. And so this bar reverses immediately and heads in the other direction. And so despite the fact that I have my stop at break even +1 on my runner, I'm thinking that we're going to come back and really test that high again. So I tightened the stop a little bit because I didn't think that we were going to get down there. I didn't think it was going to continue on. And in fact, I was hoping that would maybe retest this bottom again, but it didn't. I just tightened the stop by a few ticks, and so it came back and it took me out. Now, from this perspective, I'm thinking, okay, this is looking to be maybe it's developed into a long, and this long, it's not a second entry long. This particular long is I limited in with my stop below the matching lows, so it's really like a long off the matching lows. In other words, this is like I'm trading a tight trading range here. Now, as it turns out, I was a little early on this trade. It gave me some heat. It goes into overlap, and as a result, because it does that, I closed this trade out a little short. I took a small loss on this one because that overlap, instead of like moving up and in that continued direction, it was causing me concern when price came back down because I thought it was going to come all the way back down and take me out. So I closed the stop out. Or I closed out, I got stopped out on this trade by closing my stop, which, by the way, turned out to be a mistake. And the reason it turned out to be a mistake is that I should have left it the way it was and hung on to this trade. I got a little bit rattled, even though my concern was it was not a mistake, I would say. I mean, it was this overlap, and I don't like this. The overlap does not work. When you're looking at trading ranges like that, the only way you can get into a place where there's overlap if you get in lower. And I didn't like that entry based on this overlap or based on this pattern. So that's why I tightened up the stop. I was trying to get out with a scratch, and in fact, it came back and it took me out for a small loss. I think I lost 10 ticks on that one on the three contracts. But as I was watching it, and in the bigger picture, you can see that there was like support that was developing down here. Price couldn't get down any lower than that. And when this bar closed, you can see this bar closed right there. The bar that I got taken out on, it closed as a bull doji or like a hammer. So I got in long on that trade again because now my stop, I got a little bit better price. But now I'm thinking that my thought process is that I was right. This is the bottom of a tight trading range, and so I was more confident in that aspect of it. And I was where my stop was, and so now I have my stop below the matching lows, and I'm sticking with this. Once my stop is below those matching lows like this, as far as off that signal bar is concerned, I'm staying with this trade, and I'm not moving that stop from here. I'm not worried about it. I'm not thinking about it unless it comes back then. So I'm gonna it's either going to go to target or it's going to hit me in the stop, and at least my first two targets, my first two contracts, and it in fact goes to target, and it does get my first two contracts off. It comes back. It gives me a little bit of heat. There's some heat there. But again, I'm saying that where I am as far as my entry is concerned, I'm satisfied with that. I'm willing to take that loss now. The other trade that I had, the first one that I had, as far as the long was concerned, I wasn't convinced at that point in time. It didn't. I'm not gonna say it didn't feel right, because that would be like predicting the future. That's not what I'm saying. What I'm saying is that it just at that juncture the setup wasn't right for me. In this case, the second one, the reason I'm more confident with this is that price is riding up there. It is above where those previous lows were, and it appears to me that buyers do want to take this price higher, given the spot given the price that we're currently at below $80. And so that's why I stuck with this particular trade. It gets my first two contracts off. I get that. It takes it out. There's another couple of seconds here, and then I move my stop to break even +1 after my target gets hit. And I think you can see that. You see that bar that I entered on? This is like 3 bars ago now. But that bar that I entered on is really like a second entry long. And when it closed, because that length of that bar, it was a pullback on the second entry long. First pullback, second pullback, and you get my first two contracts. Now, I bring down the line off these double tops to the left-hand side of the chart to delineate where I think the top of the trading range is. So I see that as the top of this particular trading range, the top of the range. Call it a spiking channel, call it whatever you want, but I see this as the top of the trading range. If prices get above that upper part of the range and hold, we'll probably go higher. But as you can see, it wasn't ready for that. So I'm looking for prices to come back down again, if that's the case. Unless we have a break of this trend channel, a test to a new low, and then maybe a second entry off this other section. But I don't see that as of yet. So what I've done is I put my stop box, my 15-tick stop box, at the bottom where I see this tight trading range, and I want my stop below the matching lows on the left-hand side of the chart. So that's where I have it. So that's what I've done. So I extend this box out 15 ticks, and that's what I'm waiting for. I want to see the price to be below the matching lows. And I can move this box up a little bit, the 15 ticks, as long as my stop is below that. Now, I limit in here. And the reason I limit in here is because I can see there was a first pullback, and I believe it was a second pullback, and it was low enough to test below those areas. As it turns out, it was probably, and this one was a little bit early as well. I limited in, but I could have limited it in deeper, and I would have gotten off my trades a little bit faster. I would have fired off a little bit faster. But I did leave this, and it came within 1 tick of taking my stop out. But as I said, it was below the matching lows of the most recent price action. It didn't touch the daily low. It was below, it just came within 1 tick, and it immediately turned around. Once it turned around, I was confident that I was in the right position and that I was in the right space. And now I could have tightened up your stop a little bit, because my feeling was at this juncture is that if it does come back, it'll be a failed trade, and that price will probably kind of unwind from here. But this gave me confidence, and you can see that price started moving up here. There was a breakout pullback long at the top. The only trouble is that breakout pullback long is pretty close to the double tops that we had. I moved my stop to break even +1. I extended the top of the trading range to the left, to the right, and then once price got above that area, it held and it went higher. And as a result, this particular trade, I can't remember how many ticks I got on, but I think it was 40, 50 ticks. So on that one contract was close to $500 on that single contract from where that entry was. So it turned out to be a pretty decent trade. It did come back, and then when you look at the chart now, the total trading time I was in an hour and 51 minutes, or hour and 57 minutes, I mean. I kind of edited some of this stuff out because of the way it transpired. If you look at the chart now, this is 25 after 12, and it really went into a range. There's a couple of other trades I could have set up, but it took time. Here's my Excel spreadsheet. I just took it off a NinjaTrader. This is how I record my trades. I keep a record of this. I keep a log of this, and this is the only time you're going to see it, so take a snapshot of it or something, because I'm not showing this. The reason I did this is that somebody sent me a message, and it kind of maybe a little bit upset me a little bit about this kind of thing. So there you go. That's it. So now you've seen a whole day of trading, and I'm not doing this every day because it just takes way too long. I don't do a live trading room. I've tried it. It doesn't work for me. So this is Vance. Hope you enjoyed this. You got any questions, let me know. Bye for now.